Maximize your profitability and streamline your operations with Optimal Blue's hedging and trading solutions. With Optimal Blue, you can automate processes, reduce manual errors, and cut administrative costs. Experience faster transactions and improved operational efficiency with tools like the Compass Edge Rate Sheet tool and Profitability Assistant. Stay ahead with real-time risk management and make informed decisions quickly. Our robust data connections ensure seamless synchronization, enhancing data integrity and operational efficiency. Unlock deeper insights with our advanced analytics and modeling tools, and benefit from the expertise of seasoned industry professionals. Optimize your competitive advantage and maximize profitability on every loan. Ready to transform your secondary marketing operations? Visit optimalblue.com to learn more.
Welcome to Optimal Insights, your weekly source for real-time rate data and expert capital markets commentary, brought to you by Optimal Blue. Let's dive in and help you maximize your profitability this week.
Welcome to Optimal Insights, your weekly source for timely market analysis and expert commentary from Optimal Blue. I'm your host, Jim Glennon, Vice President of Hedging and Trading Client Services at Optimal Blue. Our clients and industry partners have long relied on Optimal Blue for trusted insights and commentary, and these podcasts are an evolution of our commitment to keeping the industry informed. Let's dive into today's episode. Welcome, everybody, to the first podcast of 2025. Hope everybody had a great holiday. Maybe got a little time off to refresh, spend time with family and friends and all. But back to it, 2025, January. Welcome, Alex. We've got Alex with me today. We're going to have two wonderful guests coming on here a little bit later from CapitalW Collective. That's Amy Creason and Pat Peters, who many of you know, and we'll talk a lot more about what CapitalW is and why Pat and Amy started the organization, and we'll get into a bunch of details around that and some of the great things that they're doing. So more on that later. But first, a couple of things. Reminder that our client summit is taking place in San Diego next month. It's creeping up here, less than a month away, February 3rd through the 5th at the Marriott Marquis in San Diego. So please do register for that if you have not already. We'll be talking a ton about AI trends, profitability strategies, market insights, and just a ton more. Wonderful speakers, as you know. We've talked about many of them on the cast before, including Tony Hawk, that we're getting very excited to hear what Tony Hawk has for us, along with a ton of industry experts and a ton of experts from our own organization. So there currently is a special going on for registration. The code is New Year 25, all one word, all capital letters, New Year 25. So register at summit.optimalblue.com. All right, Alex, let's talk econ real quick.
Let's do it.
Okay, as we're starting off 2025, not a lot has happened so far, but a lot to look forward to and a lot to watch out for. So Alex, what should we be paying attention to right off the bat?
Yeah, I think as we talked about quite a bit on the holiday specials, on the year in review, and looking towards 2025, I think we're starting out the year when we're looking at the country as a whole from a very strong position. The U.S. economy globally is kind of alone with strong forecasts for the year. Our Eurozone partners never really saw a post-COVID recovery. They never saw the highs that we saw in 2022 and into the beginning of 2023. They just had a persistent weakness in rates. They haven't been able to raise their rates as high. Energy prices as part of the war with Russia. And then, one of our biggest competitors in China, they've continued to struggle with a rebound. 2 years ago now, they had a bit of a pop in their housing bubble with the Evergrande collapse. Evergrande being a constructor of homes and apartment buildings in China. And they really just haven't seen the growth that they've come to expect from their economy in the 21st century. They were averaging, 9, 10, even 12% gains in their economy each year. And in recent years and post-COVID, it's been averaging about 5%. And so I think that's kind of the new normal for China. I think, we've seen they've seen their own offshoring of jobs to other countries such as Vietnam, India, just places where labor continues to be cheaper. So I think the U.S., I know our industry continues to struggle with volume, but from a a holistic economic perspective, the U.S. economy seems to be in a very strong position. As I always caveat, equity markets aren't the tell-all be-all of economic health, but S&P 500, the Dow, they're all near all-time highs. We saw a little bit of a pullback in the week around Christmas, which could have easily just been profit taking, in all honesty.
Yeah.
But we've seen the stock market come back this week a little bit. That's really just driven by, again, strong U.S. dollar, strong global positioning, and then the Trump presidency should be friendly to the business environment. I think the Trump team and the U.S. in general is kind of chalking up a win this morning. The Prime Minister Trudeau in Canada, he announced his resignation, which in no small part has definitely been driven by some of his policies in regards to tariffs and COVID lockdowns. So that just hit the wire this morning that there will be a new Canadian government, a first one in about 9 years, or rather a new prime minister, first one in 9 years. Looking towards this week from our perspective, just a couple of releases. We're still kind of just easing our way into the new year. We have Federal Reserve minutes on Wednesday. That's just taking a look at the December FOMC meeting. Definitely a shift in vocabulary used at the December meeting. So we've talked a little bit about on previous podcasts, but we definitely saw expectations for 2025 rate cuts were put a little bit more on the back burner. We're thinking 3 or 4 cuts, and now we're really only going to see maybe 2, 3 cuts, which continues to contribute to the strong dollar's positioning. Relatively, U.S. interest rates are going to remain high compared to the rest of the world. But again, for our industry specifically, not the news that you wanted to be hearing.
We're back to the age-old dilemma of kind of hoping that we see some kind of weakness in the economy, at least in the short term, right? I mean, we're at OBMMI is at 6.9%. It's been between 6.7 and 7% for the last few months. Forecasts are for rates to stay in the 6s throughout this year, even into next year. Volume around the holidays was anemic, but it kind of always is. But we're seeing still decent volume, but a lot of that is just purchase volume and these cash out refis we've been talking about, right? Just not a ton of activity elsewhere. And again, with the economy as strong as it is going into a year where we're going to have a very business friendly administration, most likely, I suppose we should expect more of that and follow what a lot of the forecasts are saying.
Yeah, definitely. I would agree. I mean, don't fight the Fed, as many people are apt to remind you. Yeah, just kind of hunker down and get ready for an environment that should be pretty strong generally. But yeah, volumes will remain lower, I would expect, this year. Yeah, like you said, just keep an eye on the health of the economy. I think it depends on who you ask. The headline numbers tell us that inflation has subsided to an acceptable rate. We've talked about that kind of ad nauseum on this podcast. So those that are believing those headline numbers that inflation has been contained, so to speak, want to focus on employment numbers. We've gotten some mixed readings out there from employment numbers, which we will get another reading this Friday on the 10th. 2 months ago, I think it was in the teens thousands, number of new positions in the economy. And then we saw a rebound to 200K something in December. And then we're expected to see 155,000 on this Friday's release. So definitely keep an eye on employment, but just keep everything in mind, just employment or inflation. But both should be on the front of your mind. Looking down the rest of this week, I think the biggest thing is to kind of expect a short day on Thursday, January 9th. That's National Remembrance Day for Jimmy Carter, who passed about 2 weeks ago now. That'll be a half day for the bond markets. So make sure you kind of communicate that inside your company and make sure you aren't caught out by that early close.
Yep. Okay. So half day Thursday for bonds and then full day Friday, which is unemployment report.
Correct.
Which, as you said, yeah, keep a close eye on that. It feels like, the numbers have been lower, obviously, but still positive. But they've been consistently concentrated in certain areas where we know that jobs are lacking or that supply of workers is lacking, right? Hospitality, healthcare, construction, and then the balance is like government jobs, right? But there's still this almost ghost recession for jobs in the white collar industries.
Yeah. I think more so than just healthcare, but I think business, white collar, like you said, a white collar generally has really gotten hit kind of hard, sneakily in the last 12 months. A lot of these layoffs are like these mass layoffs that we saw in like 2022 with the tech companies that found themselves pretty bloated going into a higher interest rate environment. And I think that's going to trickle down beyond these companies that were quite bloated, just as companies see higher interest rates start to weigh on their balance sheets. And then one final thing I wanted to touch on today was just this reemerging conversation. And I know it seems to come up maybe like once a year, but it seems to have a little bit of steam right now. The possibility for the GSEs, Fannie, Freddie, to potentially be leaving government conservatorship, which they entered in the wake of the 2008 financial crisis. I think early last week we saw a headline, Bill Ackman, hedge fund guy, saying that he was expecting the GSEs to exit conservatorship. And then later in the week, we saw some additional headlines. The transition team was actually, looking at this with a bit of a discerning eye. On this news, Fannie Mae's stock is trading at its highest since the financial crisis, actually. It's traded in a very low sub $5 range per share since 2008. But, it's up 64% this month on the possibility of that release. As with anything, those that are kind of opposed to larger government will tell you, once the government has their hands on something, they're not likely to let it go without a fight. But that being said, Fannie and Freddie are under conservatorship under the Treasury Department, and the Treasury Department is a department of the executive. So technically speaking, if they really wanted to get it done, they could bypass Congress. I think it would take a lot of political will and a lot of political capital. They do have a path that bypasses Congress.
Right. So speculative at this point, but just given what the administration has said in the past and evidently what they're mobilizing on right now, potentially we see Fannie and Freddie go private again, which would be kind of bonkers and say, crazy to think about. And a lot of what's happened that's unified some of the things that they're doing. It'll be interesting to see how that plays out, right? We've got a uniform MBS, for instance, that they both share. And there's a lot of the governance from the FHFA has been a huge impact on the industry through them, as agents since the great financial crisis. So it'll be interesting to see how that plays out.
Yep, that and them working in lockstep on initiatives to expand housing. I think that could definitely come under expand housing accessibility could definitely come under fire, if they were to separate and become, private entities again. But definitely more to come on that. I don't want to make any predictions, or again, it comes up, it feels like every 12 to 18 months is a possibility. So we'll wait before we have anything a little more concrete before we really put our foot down on anything.
Yes. Yeah, more on that. Will certainly be, breaking news. We'll be covering it. All right, great. Thanks for the update, Alex.
Fantastic. Thanks, Jim.
Okay, welcome. Pat Peters and Amy Creason have joined us. We've worked with Pat and Amy for many years in the capital markets space. They're both extremely knowledgeable about all things mortgage finance, and they have created a really great organization called CapitalW Collective, which we'll talk about here in a moment. We've got some super talented women in our organization, and we see it with clients as well. But there's obviously a disparity, with the amount of women that are in our industry, especially in the capital market space, just very underrepresented. So, Pat and Amy saw that and had an opportunity to start a great organization and to address that issue. So why don't I pause there and let Amy and Pat introduce themselves. Just to tell us a little bit about yourselves and how you ended up starting CapitalW.
Yes. So CapitalW is a 501c3 organization based in California. And Leslie Winnick is the third co-founder of our organization. And we look to take and promote women and allies within the capital market space. And we were very fortunate to add Deb Jones to our board as well. So we're excited for 2025. And we want everyone to take a look at our LinkedIn and join us as we take a look at what differences can we make in 2025.
That's right. And so Amy Creason, I'm a what I call cradle capital markets person. So I came out of college onto a trading desk, Fleet Mortgage, for all those that are old enough to remember that name, of Columbia, South Carolina. And my start there was really what I didn't know at the time, a very diverse desk. So by the time Washington Mutual purchased Fleet Mortgage in 2001, about 75% of the traders were women on that desk, again, in Columbia, South Carolina. So we're not talking about New York City or a major metropolitan area. And so, I think I had seen at conferences that women were fairly underrepresented, that, being the only one in a room, the only woman in a room was not uncommon. But, that was back then. Here we are in the 2020s. And my perspective is, while we've had some growth, it hasn't been nearly the growth that I would have thought I'd seen as my, career has gone by over decades. So in 2022, just kind of to our origin story, Leslie Winnick, as Pat mentioned, is the third co-founder. She is Chief Strategy Officer at MCT. Happened to be at a user conference and talking with Leslie, saying, you know what? I think it's time that a capital markets group for women is created, and no one's done it. What do you say? Would you be interested? And Leslie will tell the story. At first, she said, no, what do we really need to call attention to women in capital markets? But took it back and thought about it a little bit more and went to Curtis Richens and other leadership at MCT. And they said, let's get on board as a corporate development partner. So much to my surprise and delight, because it's one thing to find people who are of like mind. It's another thing to actually have the support behind that movement and to create a nonprofit, which none of us ever had before. Then our direction was, let's figure it out. Let's do it. Let's do an assessment of what do we need? Why? Let's ask the question, why are women underrepresented in this industry? And what could we do to improve that ratio? Not trying to take seats away from men, but add more at the table. And really, diversification of thought in all areas of business has proven by a multitude of different studies to be beneficial for organizations. Morgan Stanley in 2023, I think, had a study out, and the returns for greater gender diversity, diverse organizations was about 1.5% greater across a variety of different organizations that they looked at. Makes sense if you have everybody of the same mind, especially if they are very into taking on risk. Then you might end up with an organization that embraces risk, but perhaps without the guardrails necessary. And conversely, right, if you're risk averse, then perhaps you're not pursuing opportunities that you could. So having diversity of mindset is very important, and our backgrounds influence that mindset. So 2022, we said, yes, we're going to do this. And post-COVID, a nonprofit organization goes through a lot more scrutiny than before. So we were very pleased to have pro bono work from a couple of wonderful Shepherd Mullen women who helped us stand up the organization, and working with CPAs and all the things that we had to do to get ourselves organized and moving forward, but also developing marketing, developing programming, finding resources, because, again, starting from the beginning, we self-funded, we self-seeded as the co-founders, but we've had some wonderful other corporate sponsors come on, and we'll have some big names to announce very soon. Our purpose here the mission is to create a more diverse and dynamic mortgage capital markets, one woman and ally at a time. And allies, as Pat had mentioned, are very, very important to us. At the minimum, it's a numbers game. If we see more men in this space, well, we've got to have them help us bring and entice more women into this area. And our tagline is educate, elevate, and empower. Educate being the very first tenet, and educate means from the very beginning. So having women who are still in college, but looking at careers in finance, specifically mortgage finance, is one that's not always taught a whole lot in college. I didn't know anything graduating from a business program about mortgages. I kind of thought somebody, you go to the bank and voila, you get a mortgage. But if only it were that simple, right? So I think there's the awareness component and the education component at the very front end of the pipeline to encourage more women to join in the mortgage space, but in particular capital markets. We as an industry know we have an aging problem that we have to solve, and in very specific segments that that is a even greater disparity. But the opportunity to provide education and do it for free, we believe, is a way to help reduce a barrier. So going to college is expensive. Finding specific courses related to mortgage banking is expensive. Finding additional specialty type of courses can be very expensive. And while we certainly support all of those efforts, making folks aware of what the potential opportunities are, that I think is where we can help out on a gratis basis so that it's low cost. You don't have to commit yourself tremendously, to continuing, but whether you're on the front line or maybe you're in servicing or ops, you're a better employee if you understand the capital markets function, its relationship to pretty much everything in mortgage banking, and then the ability to train others perhaps and share that knowledge is very beneficial to organization. So that's our main goal is education programming, and we'll have some things coming up. Optimal Blue has fantastic education. We were talking about this earlier. I have enjoyed so many of your webinars, the 101s and the 201s versions of pricing and hedging and MSR valuation, and would always ask people to come and check out your website and look at that. Folks who are a little bit earlier in their careers or perhaps not in the space, we'd like to help those folks out with some of the basics. And so Deb Jones and I will be presenting a pricing webinar where it's our fundamentals. So fun is all capitalized because we're going to have some fun.
We're going to
Yeah. So two gals, reflecting on what does it mean. We're both CMBs and have been involved with folks who are going through the school of mortgage banking and trying to understand capital markets. Maybe they're loan originators, maybe they're in compliance, and the capital markets piece is just a little bit too foreign. So we wanted to take a step back for those folks and invite them to, a fun place to learn about pricing. So we have some programming. The Elevate part of our tagline, a speakers bureau. So we tend to see a lot of the same people on stages in various conferences, in thought leadership pieces. We'd like to help support diversification of that presence through a speakers bureau and help folks find the right people for the right women for speaker opportunities or authorship, you name it. And then the last part is empower. That means a lot of different things to a lot of different people, but it's giving back, it's supporting, it's providing networking, it's all of those things to bring greater exposure to women within the capital market space, the mortgage industry.
Wow, that's great. That's a lot of really good information. So we're talking about really anyone who may even think they could be interested in mortgage capital markets, right? Whether they're, sounds like you're focusing on people who are just coming out of school potentially, but it could be anybody really. Maybe who's looking for a change or looking to explore something new.
Yeah, anybody, curious minds. And in focusing on younger women or focusing on people coming out of school, I think is very important. The MBA has their impact organization, but that's more general. We'd like to focus specifically in the capital market space and help people understand that you can have a lovely career and not have to be, a bond trader on the street in New York City. You can do it from, you name it, Denver, right?
Yes, yeah, Denver, DC, and San Francisco now. So we have
right.
a lot of different desks, and yeah, I think we've always kind of understood that mortgage capital markets is a super, I don't know, a relatively small niche, even in the mortgage industry, but I find it super interesting, obviously, and we pretty much all do. So I think it's great that y'all are getting out there and educating more and trying to address the masses, especially young women who might be interested in this industry. I think that's just great. So how does one join and support CapitalW? Like, how do we get started?
It's as simple as looking for us on LinkedIn on CapitalW, all one word, a collective. You can even send us a LinkedIn message. You can also look for us on YouTube, website. We can interact any way that you are available. And it is for everyone. anyone in any career stage. We really have no barriers whatsoever. Any gender, any ally that's interested in and wants to learn more about how the capital markets industry supports the overall mortgage finance community, we are very excited and can't wait for you to join us.
That's great. So, other than, gaining some more education on this subject, because it is fairly niche, and as you said, Amy, they don't teach this in college, right? Mortgage capital markets. If you can gain those things, what are some other barriers to entry for women in mortgage capital markets?
All right, Joe, I'm gonna ask you that question first, and then I'll give you my answer.
You're asking me?
I'm asking you. Yeah, what do you think? Why? Let's talk about this question of why. Why is there underrepresentation?
Yeah, and that's really what we're all trying to figure out, right? I will say that we see less women in interviews, in resumes, right? And how a woman doesn't end up on our, applying for jobs with us as much as men. I honestly don't know.
Mm-hmm.
It's certainly not due to any kind of efforts on our side. To the contrary,
Right. Well, and Jim, that's an answer that I've gotten when I've asked other men. I was talking with someone who was at one of the boutique broker dealers, and I asked that very question about, what do you think? And his answer I think he's 27 or something like that, exactly that. We don't get many resumes of women for these positions, which now begets the question, why?
Why? Mm-hmm.
Why? And so I'll tell you Amy's hypothesis. I do think that the STEM subjects have continued, unfortunately, to not attract, draw, or welcome, whatever verb it is. And causation, I don't know. But women, I think there are certainly efforts to do so, but it's showing the path. I think understanding the culture of some of those areas. There are a lot of really, really smart girls as you look at development. So I have 2 girls and 1 boy, and they're all either in college or out. My oldest daughter, definitely a math person. Middle daughter, art, absolute art design. And my son, he's a second-year engineering student at Virginia Tech. With my oldest daughter, who graduated from UVA School of Commerce, even in that program, it was largely men, which is very interesting. I thought it was more balanced. My youngest son, engineering, handful of women in his basic engineering classes. So something is still in that pipeline coming out of school, not attracting women as much into these STEM areas. And I don't know how to solve that myself, but I would encourage any of our viewers here that are parents of girls, young women, that you talk to them about, what about a STEM kind of career? And, do you like it? Has someone said it's not cool to be a nerd? I don't know if I was a nerd per se, but I like to think that I'm really cool, but my adult kids tell me I'm not. But I think that could be a stigma that needs to be overcome. And so I don't know how to solve that except through awareness of, look at this fantastic career that you can have. And that's going to be received only at a certain, right point as probably a young adult. Backing it up, how do you encourage folks to be really interested in math?
Yeah.
I don't know how to do that, but I think so the awareness coupled with the education probably is the first barrier to entry. I think the second thing is, once we're in our careers, we really kind of have closed or limited networks, and by that I mean, if you take a look through your LinkedIn contacts, I looked at kind of done this experiment on my 2,500 contacts, and the majority are men. So in my network, the inertia is mostly men. My bosses have been men my entire career, and the majority of folks that I've worked with are men. So am I kind of closing that bubble as a consequence? If so, how do we break it back open? And I think that is the next piece. And then, we were talking about the social biases perhaps in the STEM place, but it also, and there's plenty of studies, bleeds into financial services disproportionately for women. And so I think, Empower. So we look at some of the other organizations around the mortgage industry. Empower, I think, serves a lot of women in a lot of ways. We're going to be focused again back on the capital market space and very specifically exposure to networks within the capital market space, both women and allies. So it requires, like I said earlier, it's a math problem that we're all going to have to work on. But you were mentioning the application issue. How many female applicants do you have? Why is it disproportionate? Being intentional and casting a wider net and having headhunters that go and search for women, that's the extra effort that may be required because perhaps some people don't see themselves drawn. Is it a culture issue or, expectations, things they don't understand.
I'd like to add on to what Amy said. I actually believe the women that are in the capital markets industry are heads down, doing execution, going home then to do their family obligations as well. And I would like to invite everyone to sign up with CapitalW so we can actually know the real statistics of ratios, so we can have more data and we can actually promote those women and give them a voice, represent them. They can be in a speakers bureau, take advantage of the expertise they have, expand all of our networks is really one of the key criteria for success is expanding our networks to go beyond our bubble, as Amy pointed out.
Right. I mean, it feels like a trend that can be broken, right? Even if it starts with, right, just the math and the sciences, just a trend there that tends to lean towards men. Then you get into our industry where you see mostly men doing. Maybe that's even a deterrent, right? It's mostly men in mortgage capital markets, but there are some amazingly talented women in this industry as well. So getting more people in general together to first, continue to collect the data so we know exactly what that looks like, but also to intentionally get out there and recruit talented women, for this industry.
Yeah, and it's not Wolf of Wall Street, right? That's not our space, right? It's just not. But, and I'll include myself here, it's a lot of aggressive personalities in many places, and if that is again, culture. If the culture of an organization is welcoming enough, and I don't mean that in just a little sweet syrupy way. If it's welcoming enough for disparate opinions and orientations towards risk or strategies or so forth, then you're going to attract all kinds of fantastic people because they're going to want to be there. So I do think paying attention to the culture of an organization is extremely important in being able to really recruit diversity, but also the best candidates. So this is all about merit. We're not asking for any DEI orientation on, let's just pile a bunch of women in there and I'm sure it'll all be better. Absolutely not. That's not the orientation of any rational or business or organization. You're going to hire the right people. But if you believe that the ultimate right team is really the function of good culture plus good people, then I think you naturally create a more diverse and efficient and better executing team, ultimately.
And going back to the application interview process, also being aware of bias. So even myself, and now I'm a manager again of people, understanding during the interview process, there's a natural bias for us to interview gentlemen and to look at them as opportunities. However, when you're interview women, you're looking at their accomplishments. Well, what if we actually made it 50-50, accomplishments and opportunity regardless of your gender, regardless of, for everyone? That would also help, right, to actually look past our own bias. I know I had it when I was a young manager, and you really have to work at it. At Amy's point, a lot of effort is needed to make the change.
Yeah, we all have those inherent biases, right? When I say the word nurse, what popped into your head? And I did it too, even though, my best friend's son is studying to be a nurse, and he absolutely is going to be that's exactly what his career needed to be. So,
Sure.
I'm like, stop it. Stop thinking that way. When you think of lawyer, you might still think male, but actually the numbers are that women are more than 50% representation within the law community. So I do think things are changing, and our human nature, it's really hard to admit where we have biases. It's really hard to admit that, yeah, maybe I am perpetuating this situation myself, even though I have zero intention of doing that. Maybe I do have unconscious bias and not being helpful, but really actually being harmful.
Those are all really good points. I think it takes a lot of, just as you said before, being intentional about this process and understanding the data and understanding who's right for these type of jobs. And we say it on the desk all the time. Like we need talent, good work ethic, and intelligence, and a good attitude.
Yeah.
And that's what we're typically interviewing for.
Absolutely. Can we talk about real quick what's coming up with Capital W?
Absolutely.
All right. Well, so in 2025, we are continuing our efforts of outreach to corporate sponsorship. So as we mentioned, this is a nonprofit. We're trying to offer as much free education and opportunities as possible, but we can only do that with the generosity of our corporate donors and partners. So if we may be overt here and make the request of folks who are watching, if your company might want to get involved with Capital W, we'd really encourage you to reach out to us. You can get us at info@capitalwcollective.org. And we would really love to see Optimal Blue be one of the next announcements that we make for corporate sponsorship, right? But the opportunities to partner and to promote within companies, but also within various organizations is very important to us. If you see it, you can be it. And so we're very focused on the messaging and the marketing. But also as an individual, you can contribute to Capital W Collective. We have a PayPal button on our website at capitalwcollective.org and invite you to come and make a donation. That all those dollars are going towards getting us stood up and programming going and video editing and all that kind of necessary evils, if you will, in standing up an organization. But we're going to be having some webinars, as I mentioned, and we're going to be doing that with partners as well. So be on the lookout on our LinkedIn page, and we'll be providing those updates. We also would like to have an in-person event. We're not sure we can get that organized within 2025, but certainly in 2026, so that we can build this networking, have people in person, having conversations, explorations of opportunities, and really getting to break that bubble, that inertia of our own networks as well.
Other things that we have are the MBA secondary in May. We're also working with the MBA to deliver education, both national and state organizations. And we'll do more Take 5 stories, which are readily available on LinkedIn.
Wonderful. So lots happening. Very easy to get involved. Capital W Collective. Really appreciate Pat, Amy, you being with us here today. I think this has been informative for me, and and we've talked about this a lot. We talked about it at National in Denver, and we've kept in touch over the last year or so about this, and I'm just learning more about it every day. So thanks again for talking with us and for your candor and for the info, and we will talk again real soon.
Thank you.
Thank you, Jim. We're grateful for the opportunity.
Yes.
Thank you. Take care.
Thanks.
Thanks.
All right. What a great interview. Let's wrap this thing up. Make sure you register for our summit. The room block there is almost full, and time's running out to get a room in the room block. And thank you again to Pat and to Amy for joining us today. And thank you, Alex, for your contributions as well and for talking us through what to look out for in the economy as we go into 2025. That's it for today. Join us next week for another episode of Optimal Insights, where we'll continue to provide you with the latest market analysis and insights to help you stay ahead. Don't forget to follow us on LinkedIn for more updates and to access our latest video episodes. You can also find each episode on all major podcast platforms. Thank you again for tuning into Optimal Insights.